In this video, we are talking all about a 1031 tax deferred exchange, so be sure to watch all the way till the end. What's up, everybody? It's Cassandra Lopez with the Bremerton Broker channel. If you're new to the channel, you're going to want to go ahead and subscribe. This channel is all about real estate, death, divorces, taxes, and investing. So if you fall into any one of those categories, be sure and tap that little bell so you're notified every time I drop a new video. And you can reach out to me directly. This is my cell phone and my email. Be sure to let me know how I can support you. Okay, 1031 tax deferred exchange. So the number 1031 came from the tax code 1031 under which this applies. I believe that tax code is now changed to like a different number, but we all still just call it a 1031. And it should be noted that I currently reside, practice, and own real estate in Washington State. So a lot of these facts are going to be what I know and my knowledge of having done 1031s in Washington State, but the knowledge and the fundamentals are going to be pretty darn similar no matter what state you're in. So a 1031 tax deferred exchange is essentially taking the proceeds from one real estate asset, reinvesting it into another real estate asset, thereby bypassing paying capital gains taxes on the departing property. Now, you can do this over and over and over as many times as you want until you die, and then you'll just never pay capital gains, and capital gains will die with you. So when your inheritance or your trustee or your executor, whomever is handling your real estate assets after you pass away, those capital gains die with you, so they will not inherit them. There's some other things going on there that a estate planning attorney would be really good to have a conversation with in that regard, but we're not talking about that today. Some must-know things about a 1031. So if you're going to reinvest funds from one investment asset into another, it has to be a like-kind property. So you can't take funds from a residential rental that you own and reinvest it like into a restaurant. That doesn't work. It has to go into another residential property. Now, there may be some gray area if you're going from like a single-family residential to a multi-family residential. You may be able to get away with that. You're going to want to talk to your local 1031 facilitator and or real estate attorney in your state to find out how you would manage that. For example, I own a rental unit that is a condo that I will probably be selling in a year or so. So I'm going to take the funds from that, the proceeds from that, and reinvest it into a new asset, but it will probably not be another condo. It'll probably be a detached single family residence. But since they're both single family homes, one's just a condo, one's a single family house, there's considered like kind, so I will be able to do that. But I wouldn't be able to reinvest it into something else. And I wouldn't be able to reinvest the funds into like a startup or any other type of investment like that. It has to go back into another real estate asset. Some timing considerations that need to be talked about when doing a 1031. So when you do a 1031, you have 45 days from when you close on the departing asset. So now you have the funds in your pocket. Well, they wouldn't be in your pocket, right? They would be with your 1031 facilitator. So you're going to hire a 1031 facilitator, and this is all they do all day long. Every day of the week is just 1031s. They're really darn good at them, so I highly recommend doing this. They are a couple of $1,000 per transaction, but it's money well spent because they're going to save you tens and tens of thousands of dollars in taxes, in capital gains taxes, at the end of the year when you file with your CPA. So the 1031 facilitator is going to hold the funds from the departing sale. Now you have 45 days to identify the new home you're going to reinvest into, or the new resident, or the new real estate asset you're going to reinvest those funds into. So 45 days to identify. So that means you could like literally go into the MLS, or I know a lot of people use these third-party search engines online called Rhymes with Pillow. They'll go on there and be like, that's it, that's the house, I'm going to reinvest it. That could be you're identifying the property. It could be very subjective, just like that. And it could change. So if you find a property that you want to reinvest in and somebody else buys it, or it goes off the market or something like that, and it's no longer available, you can find a new asset to reinvest. Now, from the date of closing from the departing residence, when you have the funds in your facilitator's account, you have 180 days to close on the new property. So you have 45 days to identify it, and then 180 days to close on it. 180 days, 6 months, you guys, that's a long time. Like there's rare cases where it's going to take that long to close on a property. Usually a closing is, 2 to 4 weeks, kind of roughly in there, depending on how you're buying it. If you have all cash funds that you are purchasing your new asset with, then you can close in 2 weeks. If you are using those funds as a down payment and then taking out another loan, that could take around 30 days. So just keep that in mind. But well within that 6-month window, you should really have no problem doing that, as long as the buyer and seller agree on all terms and everything looks good and it's all very streamlined there. I mentioned a 1031 facilitator. So I work with a really good one here in Washington State. So if you need a referral, I'm happy to offer that. I'm going to put his name I'm going to put his contact information and his website in the show notes, so you'll have that. And if you need a 1031 facilitator in your state, if you're not in Washington State and you need somewhere you are, it should be pretty easy with just a quick Google search, or I can ask mine here if he has any contacts where you are, and we can share a name that way as well. What happens if the money that you're reinvesting from your departing property into the new property exceeds the purchase price of the new property? Say, for example, you sell an investment property and you net $500,000, and you identify a new property to reinvest that, and the new property is only $400,000, and you reinvest $400,000, but now you have $100,000 left over. What are we going to do with that? So that difference is called the boot. I don't know who named it. Nobody consulted with me on that, but it's called the boot. And basically you're going to owe capital gains on the boot. So whatever you don't reinvest, that portion is subject to capital gains. You're going to want to run that by your CPA, the person who does your taxes, because they would be able to confirm that for you. Also, your 1031 tax deferred facilitator will be able to confirm that for you as well. There is also a reverse tax deferred exchange. And this is when the buyer, so the investor who is liquidating one asset to reinvest in another asset, identifies and acquires the new asset prior to the departing asset selling. Now, this can be done. There are a couple of more levers to pull, and it's a tiny bit more complicated. There's some, stiffer regulations and that sort of thing, but it can be done, and it's a really good option if you're like in a really competitive market where inventory is just so low and maybe prices are so high, kind of like here, where you sell your departing asset very easily and you have all this money, but now there's nothing to reinvest it into. And so if you identify the new property first and then sell the old property, that would be a reverse tax deferred exchange. You still get to defer your capital gains taxes. There's just a couple more moving parts there. One cool thing about a 1031, besides deferring all your capital gains taxes, is that you can do this across states. So I could sell my condo here in Washington and I could reinvest it like in Kentucky, right? Where real estate is super duper affordable. My money would go a lot farther. My cash flow, my cash on cash return would be a lot better, just because real estate prices are low, rents are still relatively high compared to here where prices are high and rents are high. So, there's other markets I could reinvest it in. So that's really cool. And your 1031 tax deferred facilitator should be able to manage that for you as well. So if you like that video, go ahead and give me a thumbs up, tap that little bell so you're notified every time I drop a new video. And if there's anything I can do to support you with 1031 tax deferred exchanges or any other type of investments, please don't hesitate to reach out. This is my email and my phone number. See you on the channel.